Dick, good afternoon. How are you?
I'm great. How are you? Good to see you.
Happy NBA Finals Game 1 day. Don't tell me you're going to the game.
I'm not going to the game. No, if I was going to the game, I'd be in black tie, not a jacket.
Right. Well, you look much better than I do. I have this is my GGV Founders and Leaders shirt. I always try and support the brand. So
I'm wearing that under my dress shirt.
All right, perfect. Well, you look a lot better than I do. Well, hey, we only have 30 minutes, but thanks for making time. I just thought it would be a fun conversation in the middle of everything going on in the world right now. You and I both have a lot of years in Silicon Valley, and I think maybe you could share some stories. But I just thought it'd be fun for folks to hear from you a few words of wisdom on, you certainly ran a very large company during a lot of tumultuous times. You're now investing in and advising a lot of companies in very tumultuous times, and you've been a great advisor and a great partner to many of our founders. And just thought it'd be fun to get you on for a few minutes and have people hear a few of your thoughts. But maybe you could just wind back the clock a little bit and remind folks how you got to Silicon Valley and came to be the CEO of Twitter, and we'll go from there.
To say it was a circuitous path or route, probably an understatement. So I studied computer science in school, but when I graduated, for whatever reason, I decided I really wanted to be on Saturday Night Live. So I went to Second City in Chicago and studied and performed improv comedy there for years. As I've talked about a few times before in different circumstances, I ended up showing up there the same day as Steve Carell did. So Steve and I were in the same group at Second City for first couple of years. And it was the time that it was sort of the heyday of Second City, really. Tina Fey and Rachel Dratch and Amy Poehler and all of the Upright Citizens Brigade guys and Adam McKay. All those folks were there at Dave Koechner. They were all there at the same time. So it was a lot of fun. As is probably obvious, when the Saturday Night Live auditions came around,
you didn't get the call.
I got the call for the auditions twice. I didn't get the after call either time. So I decided to put my degree back to use. When the internet took off, I started my first startup in '93 when the Netscape browser was just sort of taking off. The third company, second company or third company I started, FeedBurner, was sold to Google in July of 2007. As part of that fairly lengthy M&A process, we got reacquainted with the blogger guys who were at Google, Ev Williams and Biz Stone and Jason Goldman. And one thing led to another. And when I left Google in July 2009, Ev called me and asked me to come essentially be COO at Twitter. Did that for a year, and then became CEO in October 2010.
And you were there until?
Yeah. Sorry. So I started at Twitter in August 2009 and was there until I believe I told the company I was leaving on at 10:30 a.m. June 11th, 2015.
Not that anybody remembers, but what an amazing run. And it's funny, you go back to the days of FeedBurner and Blogger. I mean, it's just kind of funny to think about where we are today with the web and Web3 and all the new things that are going on now, and how sort of primitive everything looked back then.
It's funny. I remember when RSS, took off, which was the genesis of FeedBurner. We had this notion that people aren't going to go to these websites anymore. Everything will be decentralized and distributed. And the funny thing about Web3 is here those words are again, even though
that's not what happened.
Essentially went away, for lack of a better word. That's not what happened. So we'll see what happens this time around.
And then maybe tell folks what you're doing now with O1 Advisors, you and Adam.
Yeah, so Adam Bain, my partner here, who was he came in to basically build out the revenue organization, the go-to-market organization at Twitter in very early 2010. When he left as COO of Twitter in 2017, he and I got together and we were sort of lamenting the fact that there was no one around like Bill Campbell anymore, who was famously on the board of Apple and Steve's buddy, and then Larry Sergey and Eric's coach at Google, who would come in when a company had found product market fit and now needed to transition from building a product to building business, because everything about the way you manage and lead changes at that point. I remember seeing Brian Chesky, on stage. I'll stop using just people's last names. Brian on stage at a conference in 2019 And this public market investor in the audience said, "Hey, Brian, I was here at the same conference in 2009 when you were pitching us on air, bed, and breakfast. And here you are 10 years later and you got a $30 billion company. What's the hardest thing you had to do?" And right away, Brian Chesky said, easy, transitioning from building a product to building a business, because you go from you must be in the middle of every conversation and you must be involved in every decision to you can't be involved in every conversation and you can't be making every decision and you have to be pushing decisions down the stack. And as all that stuff starts to change, you as a leader, you start to wonder, wait, why is everything slowing down as we hire more people? I'm like, well, okay, people are waiting around to see what you say about, make a decision on X, Y, Z when you can't be doing that anymore. And anyway, on and on and on, scaling the communication architecture of the company. Most of these founders haven't built out a go-to-market organization before, so they don't really understand how inbound sales motion, outbound sales motion, marketing, and customer success all need to be integrated, and on and on and on and on. And that's what Adam and I do.
Yeah. So I'm going to just run with this because actually it's funny. This entire program we built, we call it Founders and Leaders. And the idea was trying to create a program that could help founders scale as leaders, but also for their leadership team.
Yep.
And LPs asked me, they say, what's the biggest differentiator between the companies? Obviously every company you fund at Series A and B is doing well.
Yeah.
What's the biggest differentiator between the ones that scale and go on to be, become multi-billion-dollar companies? And it's that they scaled as a team. They scaled as an organization. It's not the product. It's not raising capital. It's all about scaling as a team. And I guess for you've spent so much time on this and you do spend so much time on it. Why isn't there a playbook? Why isn't there something that, you know what I mean? It's so much of it today, like you mentioned, Bill Campbell is still a one-off advice from you to a founder or, a board member to a founder. So much of it is one-off. Why haven't we been able to scale and replicate that and teach people more about scaling organizations?
It's a good question. It's first of all, it's not intuitive, and everything that I'll back up and say a couple of things. Everything about what got the founder and CEO to that, 3 or 4 million of ARR. And, now I've got 40, 50 employees, everything that got them there. And they now have to stop doing and transition to a different way of leading. Mm-hmm. But, when you tell them that frequently, they're like, okay, I hear what you're saying, but that's not what got me here. So I'm going to, keep doing it. And then of course there are the anomalies like a Steve Jobs who, had a reality distortion field around him and did make lots of decisions, if not all the decisions, and then it worked. And then these books are written that mythologize the person, and you get these founders who are like,
but he's an N of one, right?
It worked for him, and I'm the next him. So and he's an N of one. So there are all these forces like success bias that are pushing against it. And then the second thing is, I remember maybe the best piece of business advice I ever got was, to make a very long story short, was trying to get Jeff Bezos to join the board of Twitter in 2011. And obviously that didn't happen, but we're in a several person conversation. And one of the people, Jeff asked a question about strategy. And one of the people in the conversation said, well, Steve Jobs says the most important part about strategy is saying no. And Jeff looked at all of us and said, yeah, well, I like to do everything. He got that huge laugh. And then he said, hey, the important thing to remember is there are lots of different ways to be successful. And it just turns out to be true. We've got, as I'm sure we've got CEOs who are super introverted and successful. We've got CEOs who are super charismatic and outgoing and want to go talk to everybody. So there's not one, playbook for transitioning from building a product to scaling and leading an organization and trying to do it based on, well, this is what worked at Google, or this is what worked over here, is not necessarily, probably not going to work.
And I think a big part of our job is to give entrepreneurs the confidence to have their own version, right? To have their own model. I mean, Brian Chesky is a great example where I've actually used a bunch of Brian's communication I've sent to our team and said, this is a masterclass in how you do this. But, I was lucky to have met Brian a number of times when he was raising his Series A. We unfortunately didn't invest. But he was not like he is today. And he has grown and matured and developed himself as a leader and a CEO incredibly well. And so much of it is that. Don't try and, I think this is where the pattern matching in VC goes a little off the rails, because you need those outliers that can figure out their own path and create their own model.
Totally. I remember when I was running Twitter, when Satya Nadella became CEO of Microsoft, he went around and visited, myself included, he went around and visited all these other tech CEOs. And I remember being, and he said, like, look, okay, I've run a huge organization and I've had all these engineers report to me and I'm pretty technical and think I know what I'm doing, but I've never been CEO before. Like, what do I need to know that I don't know? I just thought it was, that was such a
Very
great
humble.
lesson for me. And here's a guy who's going to be CEO of one of the biggest companies in the world who knows I don't have all the answers. I better go talk to a bunch of people who are in this role and figure out what I need to know. And I told him, the thing I told him was, you're going to have to beware of Satya said. And he's like, what do you mean? And I said, well, you'll start to say things that yesterday when you weren't CEO were just, one man's opinion inside Microsoft. And now when you say it, someone in the hallway is going to hear you and they're going to run back downstairs or over to, the next building in Redmond and go, I just heard Satya said X, and they'll start to use that.
And everybody changes. It goes, we got to do this. Right.
Or some director or manager or VP doesn't want to explain to the team some decision. So when they push back on it, well, why are we doing this? They just end up saying, because Satya said do it. And then, people run around the organization thinking that you're making all these arbitrary and capricious decisions that you may not have even said. And I saw him about a year and a half later. He was like, wow, Satya said is like an actual thing inside the company that I need to worry about. So just people being, smart about, hey, I don't have all the answers. I better go listen to some other people that have done this before. Patrick Collison was the same, always as smart as Patrick is. And, he and John are constantly making me feel, he and his brother John constantly make me feel stupid. I remember they gave one of them gave the other one the book, The History of Accounting, for Christmas. And I thought it was a gag gift. And they looked at me and said, what are you laughing about? It's amazing. But again,
they're learners. They're big time learners.
Yeah. Going around and like, what do I not know that I should listen to folks about?
So that's one element, right? That we look for is that self-aware, lifelong learner. Those, and I think if you think about Patrick and John, one of the magical things they did was they brought in Claire Hughes Johnson.
Yeah.
If you don't have that kind of MO, somebody like Claire is not joining your company.
That's
right.
You're 100%. I couldn't agree with you more. You're exactly right.
So let's think a little bit about the companies you're investing in today. And I want to drill in on a couple things. One, what do you see founders doing well in terms of raising capital and working with their board of directors? Like, do you have do you say, gosh, I've seen this and these are characteristics that I look for of a healthy team and a healthy board or investors, or do you even care? You're just like, I love the idea and I love the team. I want to invest.
No. We spend, look, Adam and I are not deep product thinkers. We're not big designers. We're certainly not super hardcore deep tech, people who are going to dig in on some real deep tech stack and understand it vis-a-vis its competitors. What we feel like we might be good at is mitigating execution risk. And, if you're going to help mitigate execution risk, you need to be working with people that are fairly high EQ and don't already think they know all the answers, or when you tell them something the team is miserable about, they don't defend the status quo or ignore you or deny that's a problem. So we absolutely look for leaders and teams that are listeners and learners and know they don't have all the answers and want feedback and are seeking input and communicate frequently. They like. I remember just recently in a board meeting of one of our companies, there were a couple of investors that were, really surprised by some piece of news, and just sat down with the CEO afterwards, and we're like, hey, you can't do that. You can't just spring these things on people. Look, you could have, you knew about this 2 months ago, and and the person was, of course, to get defensive and say, well, I was working on it, I thought I was going to be able to.
Yeah.
Like, when I was running Twitter, I would send out emails to the board, I don't know, a couple of times a week. And sometimes they're just like a sentence, hey, still working on XYZ that we talked about 2 months ago. It's not sorted yet, but, think it'll be done this week. And great. Then, people are like, okay, I feel like I have context for what's going on. I'm up to speed. But those are the kinds of leadership teams we look for. Not obviously, I shouldn't say that. We look for CEOs and leaders who are, hey, you should really talk to my head of product and my head of marketing. They're working on this thing and they're struggling with XYZ, and they don't make themselves the sole point of contact into the organization. We can be a lot more effective if we can go to, functional leaders and help them. So that's the kind of stuff we look for. It's not It's not anything dramatic. It's just people who know they don't already have all the answers.
I think your point on communication is a big one, though.
Yeah.
I did this session with Ollie and O from Belong, who
Yeah.
last week. And one of the things that I've always loved about them since I invested, we invested in Series A, but since the seed, every month on the first of the month, I just got it yesterday, they send a email update with all the metrics and here's what's going well and here's what's not going well. And it's really empowering because it lets them have an open conversation with their board. And there's nobody gets mad when they're like, well, what happened here? Everybody's like, oh yeah, you told us about that. And that sounds like an issue. And what are you doing about it? It's really a constructive way to go about building a business.
Yeah. And the same goes for communicating down into the organization. I think I used to tell, we would have these all hands meetings where employees would ask questions. Well, companies Twitter still does. Employees ask questions. Lots of companies have these, and whoever, either me or some other functional leader, gets up and answers the question. You always used to tell leaders of the company, don't spin people. If you think people are fooled, they're not fooled. And then it just creates misery because you're like, well, what else aren't they? What else is he not telling me the truth about? And so it goes in both directions, but 100% we look for folks like that who take responsibility for, hey, I think I screwed this up and, just want to let you know X, Y, Z, or, hey, I think this thing is trending in a weird direction and I'm having a really hard conversation with this other person on my team. I don't know what to do about it. All those things are great signs.
Yeah, my last company, before we sold it, we had when we got acquired, we were then part of a larger company, VeriSign. And people would hear all these rumors about what was happening, what might happen, and this and that. And so we started having the rumors and innuendo session, and during our all hands, and it was fun. People would lob in all these random questions, and I mean, it was funny, but it was also just fun to take them head on and say, guys, that's ridiculous. That's not happening. But to your point, we're also in a market right now where what I have seen over the last 5 months, some entrepreneurs and founders are very open with their team and saying, hey, look, guys, market's choppy, challenging, valuations, capital raising, blah, blah, blah. And others sort of try to hide everybody from the bad news. How are you helping people think through communication with their team right now? Because for a lot of folks, it's the first time they've ever seen any kind of downturn. If they were in high school or college in 08, 09, they haven't seen anything of the magnitude of what we're dealing with right now. You and I have, of course, but
it's true. The first thing I would say is, this, again, there are lots of different ways to be successful, and people frequently in these kinds of situations that we're in the macroeconomic world today talk about wartime CEO versus peacetime CEO. Ben Horowitz famously wrote that post about it a long time ago, and it's been in his books. I actually think it's important to be consistent with your team about the way you're leading and the way you're communicating with them, whether times are good or times are bad. Again, because if you think people are fooled, they're not. And just being open and forthright with people and talking to them and leading the same way. It doesn't mean you stick to the, what 4 months ago plan was.
Mm-hmm.
And I just think that the more forthright you are with people, the happier they are. The more you hide information from them or don't tell them things, or we're going to update you on this 2 weeks from now, the more worried they get. And they usually worry a lot more than they need to be worrying. The other thing that we are advising most of our leadership teams on now is, and I think this is a mistake that people who are going through for the first time, for going through a crisis like this or difficult economic times like this for the first time is they'll say, well, things might turn around in X months here, so I'll just make, instead of cutting OpEx by X percent, I'll cut it by X percent divided by 3. I'll make this small cut now, and because things are going to bounce back, and I'm going to be ready for it. And the worst thing you can do to a team, to the rest of the company, is these incremental changes to the operating plan and incremental cuts. And then people just walk around with knowing this sort of Damocles is hanging over their head and wondering if next week's cuts are going to include me or not. So, making hard decisions, making hard cuts, communicating it to the team that, look, we're going to make some really hard decisions and hard choices here, and hopefully it's the last time we have to do it, but we're going to do it pretty intensely right now. Is the best way you can go about those things. It tends not to be the way people do it because, of course, it's horrible. So they back off from that, but our advice is to not back off from that.
Yeah. What about external communication with customers, and any advice for folks on how to handle partners, customers? Right now we haven't seen And, it's funny, Benioff and Microsoft both came out this week and said, we haven't seen any slowdown in spending.
Yeah.
But if we do, it'll get a little tricky for founders in terms of communicating with their customers and managing those relationships. Any advice for folks, things you've relied on over the years?
Yeah, it's again, it sounded like a broken record. The more frequently you just mentioned it about the board, the guy who sends the update, the long guys that send out that note on the first of every month. Those are people you now trust, you can depend on, and you're going to have this ongoing relationship with, and they're going to tell you when something's screwy, and you're going to not have to worry about it. Doing that with your customers is the same thing. The people who are over communicating with their customers now, and who were over communicating with their customers back when times were good and everything was up and to the right, those are the same people that customers are going to be there for and want to be able to help and try to, hey, you communicated XYZ to me months and months and months ago, and we've been talking about it ever since. So I'm going to try to be there for you as much as possible when the going gets tough. And the same is not going to be true of the person who calls them for the first time when the going gets tough.
Right.
It's just not. You're going to be like, oh, now I'm hearing from you. I didn't even remember what your name was. So over communicating with customers at the C level is probably one of the best things leadership teams can be doing right now.
I'll give you a great example. I have a founder who, I'm on the board of a company, a 3-time founder. And, he was sort of out of pocket for the last few weeks. I said, oh, where you been? He said, I just traveled around the country to meet with our top 10 customers in person. And he said, I'm doing it for 2 reasons. One, I want to check in, make sure we're doing a good job for them. We've got some expansions going on, but to your point, that face-to-face is powerful. And then he said, I'm also going to raise capital at some point this year, and I want him to be a reference, and I want him to know who I am. I want him to have a personal connection with me. And I thought that's so smart in an era when so many of us are remote, to go make that personal connection, because every one of those customers will remember him and exactly who he is and what he's all about.
Yeah. Adam, this is a lesson learned from me from Adam Bain. When Adam was building out the go-to-market team and organization and entire business model at Twitter, we had to we went from 0 in revenue in 2009 to $2.25 billion run rate in 2015, which was lightning fast, and only slower than Facebook, Google, and Amazon. But we were doing it from Adam, in fact, was doing it from second place behind Facebook. And Facebook's, effective CPMs were a lot lower, and Facebook's ability to target was a lot better. And whenever I would go ask Adam, like, hey, why is Procter & Gamble actually spending any money with us when every incremental dollar they could spend with Facebook would be a lot more effective? And he said, when we go in and talk to Procter & Gamble for 2 hours, the first 90 minutes is us asking them about their business, and they're so delighted that someone is finally coming in and asking them what their goals are and what they care about, what their management team needs to see from them this year, that they work with us. And he had this sort of care more, work harder with his team. But doing that and communicating that kind of stuff with your customers and asking them what they're worried about in this environment, all of that stuff goes a lot farther than you think it does.
Let me ask you one last question about hiring and developing talent. I mean, Adam is a special human being.
He's a special human being in more ways than you can.
I know. But you also have a ton of folks from your tenure at Twitter that have gone on to do amazing things, and I think probably underreported. But just people I know in my network who were there when you guys were there. Any tips on recruiting, hiring, training, managing? Any tips you could pass along to founders and CEOs? We're in a crazy market where everybody kind of overhired last year. This year, a lot of folks are right sizing, but they're going to be hiring. And the other thing I'm encouraging folks to lean in on training and development, lean in on telling people, I want you to grow as a leader. I'm not going to bring in somebody over you in the next 6 months. I need you to play up. Any advice you'd have for folks? Yeah.
One, I always felt that all the time I spent as a CEO recruiting, even when we were, 4,500 people in 2015, was time well spent. So I think that leaders who feel like, hey, I'm too busy to spend time on recruiting, it needs to be, the hiring manager needs to go do that. CEOs and C-level executives should be spending lots of time closing candidates and talking to candidates and helping them understand their perspective. Make sure the candidate understands what you as a CEO understand about the future of your business. That's like enormously beneficial. So I do think that executives and leaders need to be spending more time, not less time, on recruiting, even as you're hiring fewer people. And then secondly, just helping people understand that both their compensation environment has changed, and the way it's changed, and how you're thinking about it, and the future of the compensation environment. All those things are helpful to people in helping them make their decision.
Yeah.
The last thing I'd say about hiring, and this is something you don't learn until you've been, running a company for a while, or running as you mentioned, one of your founders running their third company. One of the most effective things we were able to do when we were, again, recruiting against all these other behemoth companies was just helping the candidates understand, hey, no matter what, I understand you got like 2 or 3 offers, I would expect that, given, what a great candidate you are. Look, whatever happens, just feel free to always text me or call me at this number. And, based on whatever decision you make, I don't care if you don't come work here, like, let's just stay in touch and keep me posted. And I'm happy to help you with anything you're going through, or any, you feel like you made a wrong decision, or you feel like you made a great decision, but you need a mentor on something else. Just text me or call me or follow up. Those kinds of things are enormously helpful. You may lose that person today, but as you well know from having been through this so many times, all these people come back around. Yep. You end up seeing them again in some other situation or some other company, and they remember the people who are like, that's the person that told me, even when I didn't go there, to go ahead and text them and follow up with them. And they congratulated me when I took that other offer. And they always remember that.
Yeah, I think that's one of the most important things in Silicon Valley. It's a long game.
Yep.
Very long game. So many people that I have relationships and work with today, I started working with 20 years ago.
Of course. Yeah. Or you see that, or they inevitably come back around in some other incarnation of something. And you think, good thing I didn't smack that person in the face when they told me no.
So let me end on what there's a lot of doom and gloom in the market right now with Russia and Ukraine and rising rates and inflation, and everything else. Give me a few things you're optimistic about as you look out over the next, 3 to 5 years. Give me a few things that gets you excited about Silicon Valley, about tech, about life, about anything.
Anytime, had just met in the office here with a couple founders of a company we hadn't seen before. Just the pace of innovation isn't slowing down. As even as the economy slows down, and we're probably going into a recession and maybe even stagflation, the pace of innovation isn't slowing down. And as you'll remember from both the .com bust in 2001 and the 2008-2009 recession, when Sequoia famously issued their RIP Good Times deck, when things come back, they come back very quickly.
Exactly.
And they tend to come back more quickly in the private markets than people think they will. So it's the wise thing to do to hunker down for the long haul here, but when they come back, they'll come back in a flash.
So true. We try to tell our team that all the time, guys. I don't know how long this is going to last. I don't know how bad it's going to be, but I'll tell you what, on the other side, it's good. Yeah. And there's going to be some great companies that come out of this that nobody saw coming.
Yeah. Look at the 2002, 2008, 2009 vintage of companies, right? You had Facebook raising, Airbnb, Stripe, Twitter, blah, blah, blah.
Square,
on and on and on.
Incredible.
Square, you like endless, one of the classic vintages.
Yeah. All right. You got me excited. Well, thanks, Dick. This has been fun. You've been a great partner to us and a great mentor to so many of our founders. I appreciate it and can't wait to do more. And I hope people love this episode. So thanks, man.
Happy to do it.
All right. Take care.
Good. See you.